Hello and welcome to the Moonshots podcast. It's a very special episode 38. I'm your co-host, Mike Parsons, and as always, I'm joined by the man himself, Mr. Chad Owen. Hello, Brooklyn.
Hey, Sydney. And we're not alone on today's show, Mike, and we've got our first return guest on the Moonshots podcast, Mr. Brendan Yell. Welcome, Brendan.
Hey, great to be back, guys, and certainly flattered by the return invite.
Yes, it's a unique honor, Brendan. So we're expecting lots of sharp, sassy, witty, and insightful commentary from you. So no pressure. But we've got such a special show today, something we've never done before. Chad, what are we unleashing on our audience today?
So we're taking a break from our usual format and hearing, directly from innovators and entrepreneurs out there, and taking a step back and looking at some of the hottest or potentially not so hot companies and stocks out there. So we're actually turning our attention to Tesla, Facebook, Twitter, Wework, and Microsoft on today's show. And we've got an interesting format where essentially the three of us are going to decide or vote whether we think the company is hot or not, and have a discussion and see if we end up in consensus or still divided.
So Chad, do you think that together we can team up and we can try and get Brendan to switch some of his votes? Do you reckon if he starts strong on Facebook, for example, do you reckon we could sway him to the other side? Do you reckon we're that convincing?
I don't know. I'm pretty intractable on my opinion on some of these companies. So yeah, someone else may be the swing vote.
Brendan, it sounds like you and I might need to sway Chad and get him from one corner to the other. What do you think? Can we do it?
I don't know if it's going to be tough because I know I'm not moving. So we'll see how this goes.
Oh, well, great. So it's all on me. Thanks, guys. But really what's so interesting about these five companies is you can really argue them to both sides of the argument, so either hot or not. And I think this really brings us to the changing winds around a lot of these tech titans. And there's definitely been a change. I think we've seen so many different political issues. I mean, we've seen Zuckerberg in front of Congress. We've seen Elon lose some of his stardom, if you will. He's had definitely a few mishits of recent times. And we've seen like a sleeping giant like Microsoft sort of awaken from its shackles under new leadership, and it seems to be really powering. So there's so much for us to discuss here. But Chad, I think we should unleash sort of an opening thought piece that we've got together here, which is discussing the FANG stocks, and which is generally a label given, obviously, to some of the leading tech stocks. And they're sort of the bellwethers of what's happening right now in tech and innovation. So why don't we just get our minds into the groove of things to understand this shift that seems to be happening right now in tech stocks. So we're going to hear from a great analyst based in Canada. And this is him really trying to put a sharp accent on what's happening now with the biggest tech innovators in the planet.
You've probably heard that technology stocks took a beating this month as tech giants reported their second quarter financial results. But it's worth taking a closer look to get a sense of what's really going on with the so-called FANG stocks: Facebook, Apple, Amazon, Netflix, and Google, and what to watch for in the future. Of those five tech behemoths, Apple, Amazon, and Google all actually reported solid financial results. So why the doom and gloom? In a word, Facebook. The company posted slower than expected user growth, and at this point, Facebook has basically hit market saturation in North America and Europe. The social networking giant still posted a $5 billion profit this quarter, but the slow user growth, plus the Cambridge Analytica scandal, and a bunch of other negative headlines all kind of caught up with the company. Facebook's stock dropped so hard that it wiped out $120 billion in market capitalization, roughly the same as the total value of McDonald's. And tech stocks were hit by a bit of a double whammy when Twitter reported its own numbers the next day and also posted slower user growth, which appeared to reinforce the trend. Netflix ran into the same trouble with lower than expected growth, leading to a backlash from investors. Here at home, Ottawa-based Shopify faced some investor backlash of their own when the company reported its second quarter results. The numbers look solid, but the rate of growth from the e-commerce service provider is slowing. Instead of posting 75% revenue growth like they did last year, Shopify only posted 62% revenue growth this year. Now, in a lot of sectors, 62% revenue growth would be absolutely colossal. But what's important to understand here is that technology companies have been popular with investors precisely because they tend to post such huge growth metrics. If the business stops growing, it becomes a lot harder to justify that share price. But remember, the FAANG stocks are still huge and very profitable. The big question here is whether the Wall Street sell-off is a turning point for how the market views tech stocks, or just a summer blip driven by one bad quarter from Facebook. On that question, we'll just have to wait and see.
And just so you, the listener, know kind of where we are in time here, depending on how far in the future you're listening to this episode. So the $120 billion drop in Facebook was in July of 2018. And the most interesting thing for this clip and kind of this show that we have here today, Mike, is we're kind of taking a different view of these companies, kind of more from a higher level and a financial point of view. And we have 4 public companies and one still privately held company, Wework. And so I think we can have some really interesting discussion of like how the VC world viewed these companies and still views Wework. And then how once these companies go public and have, decades of stock history, like in the case of Microsoft, how that changes our perception of the company. So yeah, I'm excited to dive in and convince you all of my positions on whether they're hot or not.
This is feeling like it's become more like a boxing match. Everyone's like, I'm sitting in my corner and come get it. I will say this though, that we're using a lot of Wall Street financial analysis of the companies to be the basis for our discussion. And the reason that this is really powerful is that the stock market, the investing market, is a proxy to the future outcomes of companies. So when Facebook lost 120 billion in one day, just so you know, the single biggest stock loss in one day in US history. The amount that they lost, as the clip was talking about, was the entire valuation of McDonald's disappeared in one day. And that was how much the market said that the future prospects of Facebook are 20% less than what they were the day before. And so we're just using this as a starting point to our discussion. So you'll hear us talking about what we think of these products as users, as investors. So a great way to think about this is, if you had to invest a college fund, would you do so in this stock? And I think, Brendan, as we step back and look at the more than 20 years of history that we've got in the tech market, we've seen so many of these ups and downs. I mean, I'm instantly taken back to early 2000s when stocks on the NASDAQ dropped. I think it was the NASDAQ dropped 10% in one day. And certainly the first tech and internet bubble just popped right there and then, didn't it?
Yeah, I mean, April 2000 was a very interesting time. We had a lot of very overvalued stocks. No one really knew how big this internet thing was going to blow up, but it seemed like it was going to get kind of big. So there were people IPOing left, right, and center without much kind of backing. We don't have that kind of craziness and haven't had that more recently. This does remind me of a website that launched in 2000. And for the kids out there, there was actually a website called hotornot.com. And you'd upload a photo of yourself and people would vote whether you looked hot or not. So very pre-Tinder, but I thought I would explain the reference for the kids out there.
Well, let me just build on that. Actually, one of our companies started as a version of Hot or Not. Facebook was actually started at Harvard with, if I get it right, Chad, I don't know if you know the details better than I do, didn't Zuckerberg take photos of the students off the yearbook and then put them into a voting app? Wasn't that how it worked?
Yeah, so I'm exactly the same age as Mark Zuckerberg. And when I went to school, everyone got, essentially, it was literally a face book or a book of faces where all of the incoming freshmen had a little profile of where they were from, their high school, and kind of what their stated major was. And it was just like a little flip book, kind of like, just like a yearbook. And yeah, what he did was he essentially digitized that. And yeah, there was some voting, and yeah, you could say maybe it was a little shallow or vapid, if you will. But I mean, look at where it is today. So
I know. Now, fast forward, Facebook is like 10, 11 years old now. And, we've already done a feature on both Mark and obviously Sandberg as well. But here's the thing. Facebook is roughly at about 2 billion users. The world only has 7.6 billion. So there's this massive question about whether it's peaked or not. So let's have a listen to the first discussion about our first hot or not prospect. Let's have a listen to Facebook being discussed. Has it peaked, or are we witnessing the start of a decline?
We actually have said this, and now it's being proven that social media use has peaked in the industrialized world, and we're actually starting to see the decline. So this is what Facebook is going to have to deal with moving forward as people realize how incredibly creepy it is, the amount of intrusive how it's surveillance of its users that have been. So we expect Facebook to have to spend a lot more money. They're going to take in less money because they're limiting a lot of advertising that was very lucrative for them. And they're going to have slowing user growth or no user growth moving forward. So they've got some challenges on the horizon.
Ed, this fall in monthly and daily average users in Europe is frankly pretty astonishing. Do you think it's a one-quarter effect, given all those negative headlines we saw around the March period of time before this quarter began? Or do you think this is, as Ross suggested, a peak in the use of social media in the developed world?
I don't know that I'd go quite as far as Ross went, but I'm definitely sort of in line with him. This is certainly, Europe is hitting a saturation point. I know they've had issues there with Cambridge Analytica. We know that the GDPR is sort of, kind of crimping a little bit of the product. But I think it's more just a function of everyone who wants to be on Facebook is already on Facebook. So there's little room to grow, at least on a subscriber basis or a user basis. What they really need to do is find a way to squeeze in more ad inventory. And they actually flagged that even a year ago that they're running out of ad inventory. That's why Instagram is something they're really pushing hard and doing Instagram stories. And I think that's the story here. I mean, the stock is down a lot largely because even despite the miss, it tends to be priced for a beat, if anything. And the fact that it didn't quite do that even is what's hurting it even more. It's still a growing product. It's still their advertising is going up.
Before we get too dramatic, they still had an 11% year-on-year increase in daily average users and monthly average users. Yes. They also, the bull case on Facebook is they have all these other levers to pull, whether it's Instagram or some of their other
Instagram and Messenger and all the rest of it. So it is going to be, even if usage intensity or the number of people using is close to peaking, demand for digital advertising and to reach those eyeballs is not necessarily peak. So in an auction advertising environment, which is what they operate in, pricing should adjust. And, it's not the end of growth. It's a different flavor of growth.
But Mike, if in the next quarter or two we saw the same thing happen in the US as has happened in Europe, would we see more than a 10%
yes,
decline?
I think then the valuation gets penalized because you have to modify exactly what the long-term growth rate is.
Yeah, I think the big takeaway for me here is we simply can't expect the same kind of growth from a company like Facebook for kind of its core product. They were kind of hinting at, well, maybe Instagram can save it. But I think, at least for me, I'm going to say Facebook is on the not side of things. Not necessarily that it's peaked, but I definitely think that its growth has stalled. And I'm going to put my money on some of the other social media companies out there.
Okay. So let me just kind of hit you with a few thoughts. Regardless of how you feel about Facebook, and personally, when I hear them putting more ads into Facebook, I cringe when they were talking about that. That's the last thing I want on my Facebook experience. Do you not feel that the fact that they have Instagram, which is growing like crazy, WhatsApp's going to start charging business customers next year, don't you feel that whatever decline in Facebook happens, that the larger group of companies that it is, WhatsApp and Instagram are just going to like pick up the slack and keep the momentum going?
I don't know if those separate P&Ls could carry, the larger company. I can't see into their financials, but I wouldn't be surprised if one of those products actually got spun back out at some point if there really was a crisis.
Oh yeah, nice.
So, gentlemen, I'm going to vote on the not for Facebook. I just think that, I mean, if I look at Facebook's, so the core product of Facebook, I look at that and I go, here's myself who 6 months ago thought, why would you possibly want to ever delete your Facebook account? And then, even knowing the privacy. I mean, I installed Google Maps 7 years ago, and I figured I was giving up my privacy then. But, just I've looked into it more recently, and even I'm considering it that now. So you go, okay, let's say Facebook disappears tomorrow. What have they got left? So they've got the Instagram. Okay, look, Instagram is growing very strongly, but it's a mobile-only application. The opportunity to insert ads is limited. So those ads either have to be sort of very well targeted, very entertaining, but the ability to monetize that small screen is more limiting. And then you look at Messenger and WhatsApp. I mean, Jan Koum, the founder of WhatsApp, recently resigned from the corporation because there was a push to monetize WhatsApp, and he's like, no, you're doing it the wrong way. But I still don't think they have a way to monetize their messenger products, which are very good. And obviously, WhatsApp is kind of, in most places on the planet. So I think it's a challenging time for them. I think Mark Zuckerberg's probably had the worst year of his life. I mean, it was cringeworthy watching him in front of that Senate inquiry, and I just don't, I just see it kind of flatlining it. So that definitely means it's not hot, and for me, I'm going to vote not.
Okay, I think I'm close to where you guys are, though. I think a couple of insights for me. I think my use of Facebook is largely due to the network effect of having lived in so many countries. It's the one place where friends are, okay? And what I also notice is that how functional and basically utilitarian my usage of it has become. It's the rugby teams that I work with all organize events and communication. Coaches have private groups. So it has this core utility. What's very interesting is the thought of if people were leaving it, what value is left for the user that remains? And lastly, what I think is really an interesting test of Facebook is, would you pay for it? And I would really struggle to pay for Facebook because I feel like I'm only there because I have to be. And with the privacy concerns that I have about the choices management made when they knew about Cambridge Analytica years and years ago and didn't enforce any of their policies onto them, I feel like I'm very uncomfortable with being the product. So that being said, maybe they're just...
You got to give us your vote, Mike. Come on, now with that.
But everyone's there, like, I don't know. Yeah,
but Mike, I'll challenge you and say, when was the last time you clicked on an ad on Facebook? Or,
Oh my gosh. I mean, you're right.
Not only that, but what was the last, customer-driven product innovation that you've seen? Not like, well, we're going to try and squeeze more ad inventory in without affecting the users or change the algorithms to serve up brands' content to users in a way that they like.
Sure.
What was the last product innovation that they actually came out with that was from the customer's point of view, not trying to monetize things?
Yeah, you're right there, and I will say that it's all obligation how I come to Facebook, and I do enjoy Instagram. It's cleaner, simpler, more natural. I'm quite fond of the founders of Instagram. I think they're pretty neat guys. But okay, I'm just struggling to get a reason why they're hot. And you're right. I think it's not. And do you think it will? I want to come back to this thought of this ghost of MySpace, where you cannot. The idea here for our listeners is you cannot monetize the social graph. If you look at all the failed social networks, there is this school of thinking that you can't actually monetize it the way that Facebook and Twitter are. Do we think that Facebook is going to begin a period of decline, or are we actually saying that maybe in 5 years there is no more Facebook? What do we think, guys?
I'm thinking maybe in 5 years as well. It's not Facebook as we know it. It's not Facebook where every single one of your friends is on there and you log in there, 18 times a day to see what's going on. I just, this is a company that's had a very bad track record, not only with privacy, and this goes back to the very launch of Newsfeed. When they first put Newsfeed out there, all of a sudden they were, if you like, broadcasting out to all your friends what your activity was on the site, and a lot of people went crazy about it. But it's not just privacy, it's also things like moderation, right? Their moderation policy is very, very loose. They absolutely try to keep content on there, even if it includes some very, very, let's say, very bad subjects. And also things like digital rights management, right? So years ago, I was working with the band In Excess, and I uploaded my wedding video, which included a track from In Excess, onto YouTube. Now, within a minute, I got an email from YouTube going, hey, just so you know, this track is licensed to the band In Excess. You can either continue to upload the video there or leave the video there with no soundtrack, or you can hand over the advertising revenue to the owner of the copyright of that song. That happened within a minute. Facebook, their digital rights management system, for someone to rip someone else's video of, someone's cat falling off a roof or something, and then put it up there on Facebook, there's virtually no management system around that. I mean, there are a number of quite large companies that built their audience on Facebook through ripping off other people's clips on YouTube.
Yeah. So, that's true. Yeah,
they don't have a great track record here. I do believe, Mike, it is possible to monetize the social graph, but you have to recognize that the social graph is a personal space. It's a bit like when I'm in Messenger and a bot or an ad pops in there. I'm like, hang on, this is a personal space with me and my friends. And some guy has just jumped in the middle of the group and going, hey, do you want to buy some shoes? And you're like, well, no, do you mind? I'm having a chat to my friends here, So
let me ask you this, Brendan, for the founders that are listening who are thinking about socially driven businesses, where is the safer ground to monetize the social graph without running into all the problems of Facebook and Twitter?
Well, I think probably the best way to go about it is almost do like the mum test, right? Would my mum be okay with this, this conversation? Would she understand the where her privacy and how it's being dealt with? So I think if you take a very strong privacy first stance, there's obviously still ways to monetize that social graph. If you look at Facebook and its advertising kind of method, proposition, it's basically saying profiling, right? If you want to reach a certain profile of a certain person, we know so much about them, come in and find them on Facebook. Where Google's advertising proposition is very different. It's all about intent. If I'm typing in, Sony Bravia TV, I'm probably looking to buy a Sony Bravia TV. So it's all about intent. I know which side of the proposition I'd rather be on, but hey, if you're looking for customers that want to buy your product, that want to buy your product, then Google's a great place. If you're looking to grow a market to people that you don't know, that these people don't know they want your product already, then profiling is a way to chase those customers. So, it's a challenging one. I do believe that you can monetize the social graph. Just not sure Facebook has gone about it the right way.
Yeah. Well, we have another company that is struggling with the same business model, and that's Twitter. So I think this is kind of a nice segue to talk about Twitter and see if maybe we think it can survive on its own 2 feet. But before we do, we've got a great clip just kind of to set up where Twitter's at today.
It's really a tough call right here. I mean, I think when you look at what the stock's done year to date, I think that the drop, quite honestly, was completely justified. And really, when you're looking at what they're doing in terms of the purge, let's be honest. I mean, our thesis is Twitter cannot be a standalone company. It needs to be part of a larger whole. And when 100% of the value of your company is dependent on the integrity of the data, the quality of the consumer, they can't have, bullies, bandits, and robots dominating their platform. So this is something they had to do in the long term. And let's remember, about 7 months ago, Bob Iger came out and said they were in talks to actually acquire Twitter, but the reason they backed off was the quality of that user. I think that was something that resonated with Dorsey, and this is something that the company had to do to go forward.
Want to bring in Yusuf Squali to the conversation from SunTrust, covers the stock, has a hold rating and a $33 price target. So, Yusuf, I don't suppose you're telling investors to step in and buy after today's big plunge.
No, not at all. And in fact, we just published a new note a few minutes ago where we're actually lowering our price target to $30 on the back of what we heard this morning. The good news, and I agree with Robert, I think the company absolutely needs to do this. They need to clean up their act. At the same time, though, they are going into an investment cycle that will last several quarters, maybe even longer. And this investment cycle is going to crater margins for the foreseeable future. And because of that, it's very, very hard to try to get behind a stock like this. That said, M&A is an opportunity, but honestly, if it hasn't happened, I'm not sure exactly if if anything is imminent right now.
Can it survive as a standalone company? I mean, geez, if you were working at Twitter and hearing people having that conversation, Brendan, don't you feel like you would just be shuddering at that kind of speculation about your company? I mean, it would just be a bit soul crushing to try and build something and people are questioning whether it can even do it without being acquired, right?
Yeah, I mean, I don't need to ring the people ops department at Twitter to figure out that there's probably a lot of people leaving that place right now. They're all probably reasonably highly paid and in high demand in San Francisco. Look, it's a tough one, Twitter. I mean, I think there's still a place for Twitter. However, the whole bots and automated posts. I mean, I feel like I regularly might jump on a Twitter to promote something. And I feel like I'm broadcasting out there, but there's no one listening. I just think the engagement rates from the average user are just very low. And if people aren't engaging, they're not seeing ads. That they're going to be hard to monetize. Obviously they went through recently and cleaned out a lot of these fake accounts so that people that had bought 30,000 Twitter followers, ended up with sort of 15,000 or 2,000 or whatever it is. So, look, I'm going to vote. I don't mind Twitter, but I just feel like the engagement is just too low. Everyone's broadcasting, no one's listening. So I'm voting not. A big fat not on this one.
Ooh. And just for a bit of speculation, who would you see as being a good fit in terms of acquiring Twitter? If you were to attach Twitter to another company, who would that be?
Yeah, it'd be one of the media networks. I still believe that Twitter around events, TV shows, you want to vote for who's going to win The Bachelorette. I mean, I think it's kind of a useful engagement platform around specific events. I just don't think it's one of those things that people log into every day and go, oh, hey, I mean, there are some people that do. But so I'd go one of the big media companies. Disney is an interesting one, just like an NBC kind of. I could just see one of those big TV networks utilizing it very well.
Yeah, or Viacom.
Yeah, I would totally go CNN. I think Twitter really is unique when something's happening now.
Mm-hmm.
I think this is the only time in my world, and I'll give you a great example. So it's Saturday afternoon, it's 4 o'clock, and I'm at one of the many different rugby games during the winter that I'll go and attend. Now, because I coach a number of different athletes, I can't be at all the different games at the same time. And Twitter is invariably the best place to go to get live scores. That's a great use case of when no other media company, including Google, no one can produce real-time information like Twitter. So I feel that that's its only bastion where it has a truly defendable point of difference, some sort of unfair advantage. But Chad, when you think about Twitter, are you just doom and gloom, or is there some bright hope? Because Jack Dorsey is unquestionably a great leader.
Yeah, I think Jack Dorsey's efforts are better spent elsewhere. And personally, I think Square is just a company that has far better prospects in the long term. I mean, getting into the payments and financial services space, I think it's only going to continue to grow. I don't see another strategy for Twitter. I think aside from some kind of acquisition, just interesting factoid here, it's the only company that we're profiling where its stock price and valuation is actually lower than when it IPO'd, which, given the 5-ish, years of history, that's just not, that to me, that just doesn't bode well for the company.
Yeah. It seemed to be doing quite okay up until it announced that it had to purge so many users, And I'll tell you another interesting thing about Twitter is breaking news of the last 24 hours is that Snap, okay, has also announced struggling user growth. So there is this really big theme happening where daily active users are under huge pressure across Facebook, Twitter, and Snap. So there seems to be company-specific problems, whether it's privacy or bots. And then there's this greater theme of this saturation of social, and perhaps also there's this theme of people just like trying to fight back and get back some of their hard-earned attention and time and put them towards other things. Do you think that's happening, Chad?
Yeah, and my not votes for Facebook and Twitter, I think really just they are no longer going to be the high growth companies that they had hoped to be. I think certainly Facebook for sure can reach some kind of equilibrium in terms of, I don't think it will go away like MySpace. I think it could lose some users. And I think Twitter could probably find an equilibrium as well. They're not going to grow like the investment community is hoping and has valuated them at.
Yeah, I'm with you guys. Huge problems ahead specific to Twitter. It had a very flat time under previous leadership. It was looking better under Dorsey. Then they had to purge a massive amount of fake accounts. It leaves them in a pretty fragile position. And I really like your thought, Chad, that, you know what? Square is killing it. Imagine if Dorsey was full-time. What would be happening? And obviously Square's in the payments area. It has none of the social storm clouds around it. It's just a highly transactional, effective business to help small businesses grow. So I think we've all landed on a pretty clear consensus for our first two. So we're a no on Facebook, we're a no on Twitter. And I think this really puts us in this clear thing that there are company-specific problems for both Facebook and Twitter, but there is this greater a ghost of MySpace about how delicate it is to monetize the social graph. And both companies seem to have had either privacy or fake account problems or both. And it really, really puts us into some real clarity about if we're entrepreneurs and we're trying to build businesses. I think you can say it was vastly underestimated in the case of these two companies. How much care and attention has to be taken when the users become the product. So I wanted to ask you, before we go into the other three companies, and we've got some big news in those as well, is there a social company that either of you guys see that you feel like is doing it well? Is there a company we can point at? And obviously Snapchat is not one of those. Is there a company out there, let's start with you, Brendan, is there a social company of prominence that you see and go, those guys are doing it right?
Yeah, well, there's this company, I don't know if I could call them as social. I suppose they technically are social, but if you look at what WeChat has built in China, obviously started off as a simple kind of messaging platform similar to WhatsApp, but has gone out into, payments. It's completely replaced email in China, not that it really existed, but that's kind of what they use there. There's like website type. You can order food, pay. I mean, it's developed this massive ecosystem around that social graph. And I'm sure Mark Zuckerberg must be scratching his head saying, can't we just do that? Like, that seems to be really making a lot of money. So that would probably be the number one to look at. And, if anyone's not even just explored WeChat, I can highly encourage it just to show you how actually innovative the Chinese have been with this messaging platform.
What about...
I smell a future show topic in
that. Yeah, I was just Googling around. Yes. Well, Chad, where are you on? Is I know you have a personal aversion to social.
I'm a Luddite in that department, Mikey. you know that. The listeners have probably picked up on that by now. I can't think of any, but I'm definitely going to do my research on WeChat because I'm very curious.
Yeah, so they're owned by Tencent. So for our listeners and everyone keen to look into them, Tennyson is the place to go for
and
that.
Michael, just mentioned that Jason Calacanis, the famous Silicon Valley angel investor, Uber's first angel, he is running a thing currently called the Open Book Challenge, where he is offered to fund up to $100,000 startups that are looking to be the next Facebook or social network.
Fascinating. So where that gets us to is sort of a very clear picture on social. And what's really cool is we've got 3 more companies coming up. We've got Tesla, Microsoft, and Wework, and very different companies. I'm very excited to see what patterns we can decode here. Where would you like to start, Chad? If you're looking at these 3, what's got your curiosity? What are you dying to ask the question, hot or not?
Well, I don't know. I think we start with the big personalities and go to Tesla and Mr. Elon Musk.
Okay, so just to set up Tesla for a moment and to kind of set the context here, there was a tweet that went out a few hours ago that is rather controversial. And basically, Elon Musk is asking the question out loud, shall he take Tesla private? The stocks went soaring. They had to call a halt on the stocks. This is massive breaking news. Where are you guys at on when you hear this news, taking Tesla private? What's your first reactions?
Oh, look, I mean, if they can continue to fund it, I mean, one of the great things about being public is your company is reasonably liquid, and if you need to raise more capital, it's a very quick process to do that. Look, I mean, Tesla is an amazing company. The fact they've got Solar City has kind of been sucked in there now. I'm a massive fan of Tesla. I think they will continue to grow. I think, I get worried with Elon is so much in the public eye these days as the CEO. I mean, I know he is called the co-founder of Tesla, but, Tesla was founded by 2 guys, Mark Tarpenning and Martin Eberhard, who actually had electric cars running around the streets before Elon even came along, and then joined their Series A, became chairman, and then they let him call himself co-founder. So, I get a little worried that there's a bit of an ego thing going along there with Elon. But I'm a massive fan of the company, and I'll just call it straight away. I'm calling them hot.
Oh, you're hot. I love this. This is a strong call.
Yeah, well, I'm going to pile it on right after Brendan. I'm going to call Tesla hot as well.
Tell us why.
As you could probably tell, I'm of the sort that I love the companies that actually build things and do things. I think while many of Elon's ventures are kind of too ahead of their time, I think we're finally getting to the point where many of his big bets are starting to prove themselves. Certainly he had big wins at SpaceX. And I think now, he's kind of overpromised maybe a little bit when it comes to Tesla. But I think, if we're having this discussion in 3 or 5 years, there's going to be hundreds of thousands of Tesla electric vehicles, I think, driving around all across the globe.
Yeah, I agree. Well, I think without doubt, it is a wild ride when you're with Elon. And we have a great clip. So let's listen to that. And I'm a bit mixed, so I just want to let you guys know I'm a bit mixed. I'm going to need some convincing. But first, let's have a listen to Scott Galloway again discussing Tesla and the wild ride that comes with Elon Musk.
Is this the Thomas Edison of our generation? Right. Will this company change the automobile industry forever? Or is the stock wildly overvalued? And I think the answer is yes. I think you're going to see the auto industry remake itself largely because of the inspiration of Tesla and Elon Musk. It's an incredible car. He is the Thomas Edison of our industry. Big, bold innovation. But the company trades at, I think, 7 times revenues, and the majority of auto firms trade between 0.25 and 1 times revenue. So this is a company that if its stock got cut in half, by traditional automobile metrics, it would look inexpensive. And what's strange? Whenever I make these statements, people descend on me. If I ever say anything negative about Trump, people descend on me. If I ever say anything about Apple, people descend on me. And Tesla, has such a rabid following that my Twitter feed will light up when I get back to the office about what an idiot I am because I dare question the genius of Elon Musk.
The genius of Elon Musk. Well, it's on one side for me, it's like, I think what he's revealed in the last 6 months is equal parts genius and talent and equal parts ego and arrogance. Like the way he handled the rescue of the children in the cave was him at his worst. The way he has engaged analysts from the financial industry is him at his worst. But his boldness in his ideas and how he sees the world is him at his best. I would actually say that if this announcement had not come out in the last 24 hours about them going private, I would have a hard time seeing Tesla survive under the constraints of being a public company. But I'm actually going to put forward to you, Brendan, that Tesla going private closes the deal for me. I'm very hot on Tesla because Elon would not be subject to all the grown-up stuff that a public company is required to do. So I think this is genius. What do you think?
Yeah, look, I completely agree. There's no doubt that Elon hasn't really enjoyed being the CEO of a public company. All the the analyst calls, all the questions, all the second guessing of what he's doing. His relationship with journalists would be called frayed at best. So taking it private takes away a lot of those things, and all he has to do is make good cars and sell them, and the business will be successful. The tweet says, I'm considering taking Tesla private at $420, funding secured. Current share price today, as it sits on the 8th of August here, is $380. So it's quite a premium. But if the funding's secured, I think if that allows him to just build a great company and not deal with that public side of things that he doesn't handle very well. After Trump, he was the next, Twitter account we probably should cancel. So look, I think it's I think Tesla's around to stay, no doubt about it.
Yeah. And just again, looking at SpaceX, which has been private, it's got almost a $30 billion valuation, about half that of Tesla's. And he's just building rockets and going to Mars, I think tamping down on a little, some of his eccentricities is probably a good thing.
Yeah, I mean, to me, the things that have borne out is when he's obviously super stretched, right? And he's got this a very obsessive personality. I think this move makes life easier for him if he can pull it off. And the audacity to even have this idea is just, it's a great lesson for us in contrarian thinking to what we just had on the Steve Jobs shows. Those that are crazy enough to think different and believe they can change the future are the ones that do. I think you see a great entrepreneurial spirit and a huge lesson here to break the constraints, don't you, Chad? Don't you think like Elon just seems so free in his thinking? He doesn't seem shackled by the de facto standards in which he lives.
No, he finds out that he needs a better battery to create a $50,000 sexy, affordable electric car. So he decides to build the biggest battery factory in the world that churns out hundreds of batteries like a minute. Yeah, I think and he's been fortunate enough to have the financial backing and funding to place those big bets. Things like the Hyperloop are going to take, I think, much longer to prove out if they ever do. But yeah, I mean, I'll bet on $50,000 electric cars every day over, ephemeral social media messaging and media companies.
Yeah, fair enough. Well, so it sounds like we have a strong hot here. So where does this leave us in the tally so far, Chad? Where are we at?
We've been unanimous, I think, in our hot or nots on Facebook, Twitter, and Tesla. I'm curious if there's going to be any dissent in the ranks in these final two.
Well, just a reminder, if anyone listening to the show wants to get the show notes, the details, they want to find out more about our super guest, Brendan Yell, where do they go for all that information?
Well, they can find that at moonshots.io. We've also got our a whole host of future episode ideas, what you can expect in the coming weeks and months from the show. You can also go back into the archives and listen to our previous show with Brendan, episode 8 on Ed Catmull from Pixar. It's a great episode. I'd highly recommend you go back and check it out if you're just now popping into our latest feed on the podcast. Yeah, and don't forget to leave us a rating and review on iTunes. We always appreciate it.
Totally. And Brendan, tell us what you've been up to. We obviously, we've introduced you into the show. You wear at least 2 hats, if not more. Tell us a little bit about what keeps you busy and where this love of technology and innovation comes from.
Yeah, well, I've been involved in tech and tech startups, since I had a Commodore 64 and a dial-up modem. So that's how far I go back. But look, my day job today is I run the startup program for SendGrid. SendGrid, an amazing company that sends emails for some of the world's biggest companies, including Tesla and Uber. But I also run Startup Grind in Sydney, which is a great monthly event where we get a successful founder to come in and tell their story.
And beyond Commodore 64s, what are you seeing in today's world of startups and technology? And you're talking to so many startups. What are the things that you see that have you most excited? What's the stuff that's really got your interest at the moment?
Oh, look, I'm definitely looking at the AI space. I think that is just really allowing you to build a new range of products that couldn't exist, 5 years ago. So I think that's super exciting. And I probably talk to around 300 startup founders a year. And, I think just in that last Tesla highlight there was pretty interesting. And it's a great lesson for founders that, don't worry about what TechCrunch or Mashable or even the Moonshots podcast is saying about you. No. Just get in there, build great products and sell them to customers.
Yeah, that's really true. Like, don't be too obsessed with the media and what the outside is saying. I think, the other lesson here is, if I extract what happens where Elon's at right now, is it something that I'm interested if you've seen much, but I have certainly met a lot of founders who have taken on capital, either privately or publicly, and not really been aware of the expectations that come with that. And the great example is people who raise too much or from the wrong venture capital firms, and then a year or two later go on to regret it because of all the implications. Either, like Elon, he took money from the public markets, but he's not enjoying being a public market CEO, or startup founders who are under the pressure of venture capital firms invest because they want a liquidation moment. And maybe the startup founder doesn't want that, but then doesn't have the freedom anymore to choose because they took money from others. Is this a learning that you've seen and something that you see startup founders tackling?
Yeah, absolutely. Last week in Sydney, we had the founder of Finder.com. He's built, roughly $1 billion company, completely bootstrapped. And when you talk to the, Fred Sylvester about, growth hacking and SEO, like, this guy knows how to find customers and not pay for them. So, it's that great adage, the best way to raise capital is from your customers, because you're getting to people to actually validate the product you're selling, and you learn from those customers as well. So, look, in certain industries, raising capital is necessary. It's a race to get to a certain point, and capital can speed up that race. So it's not always a negative, but if you can do it, bootstrapping is a great way to go. And people fall into the trap of reading too much in the media about, everyone raised capital. He raised capital. 2 guys in Los Angeles raised $5 million on an idea. When you look into it, it's never usually that the case. So, I just ask founders that don't just read the media about everyone raising money. Get out there, get your product in the hands of people, get feedback, and hopefully they'll pay for it.
Yeah. It's almost like classic old business advice, isn't it, Chad?
Yeah. Well, and actually, one of our companies, Wework, I think is maybe kind of fallen into that, raising money as fast as possible. Granted, it is in the real estate business, which is a very capital intensive business, but they have a tenuously defensible position in the market because it's a relatively simple idea. And kind of in the same way that Uber is a simple idea and Airbnb is a simple idea. So they just wanted to pour as much cash into the company as possible to just increase user growth and in just capture all of the market share. So we got Scott Galloway of L2 coming back and setting up Wework for us.
Wework is arguably the most overvalued company in the world. Wework is now getting a valuation equivalent of $550,000 per customer. So it's hard to imagine how they can monetize consumers to the extent that warrants a $550,000 valuation per consumer. In some instances, Wework, if you do the math, the floor that the Wework building leases in a building is worth more than the building hosting the Wework. I bet if you looked at a Regus or another co-working space, you'd find that they're worth kind of single-digit thousands. Wework makes absolutely no sense. That is the perfect example of kind of this frothy market of consensual hallucination between the company and its investors.
Did you love that consensual hallucination? Brendan, what do you think? Is there a whole lot of hallucinating happening with Wework as a business? Is it just a property business disguised as a tech company?
Look, it is a property business described as a tech company. However, they've got a kind of bit of a problem is they don't own any of the buildings that they're in. And, I think that's a kind of a small problem in the business model. And that would be fine even if they'd gone around, 5-10 years ago and picked up all these, long leases at a bargain basement kind of, fire sale prices. But they haven't. They've gone around and picked up all these leases and paid a premium because they wanted the best locations. It reminds me of a story that I'd met an old Jewish guy about 20 years ago, and he had a building in the red light district in Sydney, and he turned it into a backpackers. And he was proudly told me that he earns per square meter or per square yard more than the Hilton Hotel. And I was like, no, you don't. And he showed me the math, and he actually did. And he goes, and I barely even cleaned the thing. And he was right because he jams, 11 backpackers in a small room with bunk beds, and they all have a shared bathroom, and he's getting, $40 a night from each of them. You do the math, it's more than the Hilton Hotel costs. So the difference is, though, this old Jewish guy owned the building, right? So he was maximizing his return on that building. When you're just leasing other people's buildings, I just can't. I mean, I've always had a question about that model, and obviously, in the last year, a few people have kind of noticed this as well. The other thing is that for WeWork is they've had a lot of competition. Like when I first went to WeWork, I'm like, hey, this is a cool space. I'd like to work here. I'll take a casual desk here. That's fine. Now if you go to any of the markets like, San Francisco or Sydney or New York, there's WeWorks, but there's a whole bunch of other, cool, funky, hipster co-working spaces that are actually cheaper than WeWork. So they've got a problem there with the competition that's around for them as well.
Yeah, I think my favorite part is that I'm sitting in a $550,000 chair right now because I'm sitting here recording from a WeWork in Dumbo Heights, Brooklyn. I'm going to come out and say that I'm putting WeWork in the hot category with an asterisk because I think WeWork is only going to continue to grow, but I do think that its valuation isn't quite justified. But I think that it is going to, it has over 200,000 members globally. And, I think they're on track to try and acquire 500,000 by the end of 2019. And I think the business model is actually simple enough where it's not that hard. It's not that hard to figure out. I did some digging and find out, the amount that they're investing and paying per seat or per desk has been continuously declining. So I think they're getting that economy of scale. And I think the product is good enough where they could get those, where they could, achieve those numbers. It's a simple, lease arbitrage business. And, it's kind of hard to mess it up. Even I can kind of understand how the math works and what the product is. So I think the future of work is this kind of communal, collaborative, freelance, distributed work. And I think, WeWork is the place where much of that is going to happen. So
So let's just flip into the use case. You're actually a customer of WeWork. Tell us, are you satisfied with what you get for what you pay and what would get you out of a WeWork? Give us a little context around your experience as a customer.
My answer is kind of funny because what is getting me out of a WeWork is another WeWork location. They're building a brand new beautiful building in the Navy Pier in Brooklyn that has, views of Manhattan and a rooftop conference center and a fitness center. So they're continually improving the product, and so yeah, I'm potentially going to be leaving this WeWork building for another one. But just for the price point, I don't see how they'll ever make $550,000, lifetime value from me. But for less than $500 a month, I have a dedicated space where I have essentially everything I need to run my business.
Yeah, I got to say that there is at least, number one, the valuation is ridiculous. When you think about it, guys, we're talking about this startup has only 200,000 customers. This is what Twitter and YouTube and Facebook and other services acquire in a day or a week. I mean, and it's a pretty transient customer base. And startups come and go, people come and go, and yes, the experience wherever you go, a WeWork is pretty good, but regardless of which city, which country, I can't help but wondering, like I hear a lot of people who want something really nice. For example, a shout out to my friends in Sydney, Digipool. It's a great little startup focused on talent. Those guys found a local boutique space that is beautiful, really, really nice, and comparable with a WeWork. And then there's lots of alternatives on the more affordable side that, at least here in Sydney and San Francisco, where you can get the same thing for close to half the price. So this points to me towards a couple of market factors: consolidation, them having to acquire a lot of boutiques and cheaper, and this whole scale business is really a question of, are there others who are better at scaling real estate than WeWork? And I'm honestly, is this hot? Would I invest? Would I pay $1 to own WeWork stock? I wouldn't, because I'm absolutely a no, because there are far better companies. We mentioned Square from Jack Dorsey. That would get my money 10 times before I spend $1 in WeWork. Where are you on spending the college fund, Brendan? You got lots of kitty winkies at home. Would you spend $1 buying WeWork stock if you could?
Yeah, look, I don't think I would. I think the current investors in WeWork will continue to pour money into this for a fair bit longer before it turns around. Look, I think their co-living product called We Live is interesting. They're trialing different sort of formats of that, from just straight subletting apartments to smaller apartments that have more larger communal spaces. So it's certainly interesting. They're not the only ones doing that, but for me, I'm afraid I'll just have to I'll have to vote a not on that one.
Too nice. Is there any chance, Chad, we can get you over to the not? I mean, honestly, Chad, would you, if you had $100 and you can buy any stock or WeWork, would WeWork even be close to even in the top half?
I don't know. I'm not an investor. I mean, all I can say is in terms of growth, I think WeWork is going to continue to have the kind of growth numbers that will be really appealing to not only the VC community but also the public investment community if and when they IPO.
Well, we're trying real hard, Brendan. Is there any other rationale we can pitch to Chad? Can we get him across to the nose? Is there any other arguments that you can come up with on the not side of things for WeWork? Are we really hallucinating about this company?
Yeah, look, I still think we are hallucinating. Look, I mean, what Chad says about that kind of, office space arbitrage, the leasing arbitrage, he's correct. I just believe there's too much competition out there. And while I like the product, it's not unique enough for me out there. Yeah. And I just think their model is, they're gonna have to almost take over the world to kind of make it work. So I'm going to sit on a knot, and maybe I can convince you, Chad, but maybe not.
Well, it looks like we didn't get him across the line. I mean, the interesting thing though is growth is essential for the future of WeWork. And I think the lesson inside of this is understanding your business model, not only now when you're in a young phase and an early stage, but it's also understanding what's to come down the track. And I think for the audience, it's such a good lesson here of WeWork it's like being at a casino. They have to double down. Like there's no in between for them. They have to go on a rampage of leasing, maybe buying properties and just scaling as much as they can. And this requires a skill set, particularly operationally, to get efficiencies of scale, to be able to have enough capital to keep funding growth, because they're going to be way off revenues that are going to cover the cash required. So they're going to have to keep going to a lot of these big later stage venture firms. I believe SoftBank is a big investor in them.
The largest.
And they're just going to have to keep like getting checks in the billions. And if they were to do anything that puts that at risk, for example, privacy that we saw or fake user accounts that we saw really dogging Twitter and Facebook, if they had the equivalent, this business could be in huge trouble. So whilst Chad is right, they can grow, there's a lot of conditions to that growth. So I think we're hallucinating. Any chance, Chad, we can bring you across to the nose after that argument?
No. I'm gonna stand firm in my heart.
Okay. We tried, Brendan. We tried, mate. Okay, so we've got one more company left that has growth mastered over the last few years. And it's such a sharp contrast to the chapter under previous leadership. And we're talking about none other than Redmond's finest, Microsoft. So let's now kind of put our headspace in a totally different type of business. We're back into software. There are themes of reinvention and possibilities all happening around Microsoft. But what we really have to ask ourselves, is this really a growth company? Is this really a growth unicorn? Or are we just seeing a return to normal and things are going to plateau? So let's have a listen now to commentary about Microsoft.
I think Microsoft is benefiting from really two things. One, they've moved their product suite to where the market is, as well as I think the increase in economic activity has brought up all areas of the business. Even Windows OEM services was up 7%, which I don't think a lot of people saw the PC cycle getting better. So almost every number in this report was better than people expected.
I mean, right now, the pre-earnings options trade suggested perhaps a 4% move in Microsoft up or down. That's what we're seeing pre-market right now. It's very hard to move a company this big in that kind of a way. So what's going to power Microsoft shares in this current quarter beyond just the guidance that we've got?
Well, I think that's probably the biggest question facing Microsoft. Over the past 5 years, you've seen it move from really a high single-digit to low double-digit multiple of earnings into what is now a growth multiple. And I consider, we're value investors, so we're typically buying them when they're cheap and selling them when they get to a fair valuation. But Microsoft hasn't really given us the impetus to sell it, because it continues to grow earnings now fast enough to keep up with that high valuation. So it is that rare value unicorn where you buy it based on valuation, and the valuation continues to remain relatively cheap as earnings continue to accelerate. Very few big companies can move from being a flat revenue company to this kind of accelerated growth. So it's a real credit to Satya Nadella and his team at Microsoft.
Yeah, the most surprising thing for me with Microsoft is just looking at its stock graph. It's gone up. So it's, aside from the blip in 1999, 2000, it's just continuously gone up. And this shift that they're pointing out is kind of like this crufty, stodgy company to a growth company, reflected in its price to earnings ratio, is really interesting because, it's like a $800+ billion company. And here they are growing revenues enough to make people perk up and be like, oh, maybe we can consider this kind of a high growth tech company. And I think you pointed to it right off the bat, Mike. It is this new leadership. It is Microsoft just figuring out its different business divisions and launching products that are really hitting stride in the marketplace.
I guess, number one, big lesson here is the change in leadership from Bulmer to Nadella. Massive change. You can look at the stock performance and it correlates directly with their leadership terms. That's number one. And certainly what that meant from a product perspective and an innovation perspective was a massive push towards the cloud, to finally getting Microsoft onto iOS. Do you remember under Bulmer, they had these stupid policies where they'd never put Microsoft Office apps on iOS? Just archaic thinking. So fresh thinking, fresh leadership, things are looking pretty okay. Question though, and I want to put this to Brendan, has it returned to, has it made up for lost time, and is it just going to now have a mild growth profile, or are you seeing things that could make this even a growth unicorn? Do you see bright blips on the horizon that could mean that we've got more of this kind of growth ahead of us?
Yeah, I mean, look, Microsoft is a company that, for virtually all of us has been around for a large part of our lives. And, it started out as a software for personal computers. If you look at the company today, you won't find a lot of Microsoft software in my house. But if you walk into the city and walk into some large enterprises, you'll see Microsoft software everywhere. So to me, they've done two things really well in the last 10 years, which is one, that full transformation to a B2B enterprise software company.
Mm-hmm.
I don't think Microsoft really cares that I don't have, Windows running on any computer in my house. And the other thing they've done really well was just that shift to the cloud. When they had all these corporations paying a lot of money for Office licenses, they did a great job of actually migrating those enterprises across to Office 365. They bundled in some Azure hosting. They gave them some cloud storage with OneDrive. They did a really, really good job of that. Sure, some of those enterprises went over to kind of the G Suite, but most of them stayed. They didn't want to have to retrain their people on a new piece of software. Office and Outlook all looked kind of the same. So they did a really good job of that transformation. They also moved the company from a kind of license model of how you bought my software in a box to a subscription SaaS model, which means they don't need to come up with new versions of the software or major updates to, get someone to buy a new license. So, look, I think they're in a really good place. I think they're going to continue to grow. I don't think it'll be skyrocketing, but it's super solid. And I'd certainly invest my dollar or even more in Microsoft. So I think they're in a great place. So I'm calling them hot.
What about you as a customer, Chad, on this one? Do you use or, dare I say, love anything from Microsoft at the moment?
Yeah, of course. I think that they were able to make this transition to the cloud kind of just in time. So Amazon's AWS could have kind of eaten the entire world when it comes to running applications in the cloud. I think Microsoft launched their Azure platform just in time to capture some of those really big enterprise customers. Amazon certainly makes itself available to anyone and everyone as kind of a self-service model. I think Microsoft's Azure platform's kind of the heavy iron system out there, and they got their 365 into the cloud kind of just in time. Like 10 years after Google Docs, but I think if they had waited any longer, they would have kind of lost their last few customers to AWS and Google Docs. But I'm a gamer. I've always loved the Xbox. And I'm not going to lie, I was on the Microsoft website today looking at their new Surface Go tablet. I've got a Surface at my apartment as kind of my, putzing around computer. And and I have thought about replacing my MacBook Pro with the Surface Book as soon as they come out with the 6-core version. So as a user, I was a Microsoft user well into college, and then kind of when my creative streak came out, I converted to Mac. But I'm gonna follow on with Brendan and say that I'm putting Microsoft in the hot column as well.
Wow. Well, one thing that is very true in our household is the Xbox is a prized possession by my son, without doubt. And the interesting thing is he chose to graduate to a PC for gaming, and Apple really lost in that disconnect. Even though he's familiar with iOS devices and the Macs that we have around the house, he actually made a jump to the PC platform in that case, and he really covets his gaming tower. So there's a lot to like there. I think another thing to like is that they continue at Microsoft to close the gap on cloud hosting with Amazon. Just recently, in the last few days, Gartner came out and said that Microsoft is continuing to erode the lead that Amazon has. And it's really testament to this company, because you guys will remember the famous Bill Gates memo when he said, "We miss the internet." And this was in response to Netscape. And they turned around, they built Internet Explorer, and they overcame that. And it seems like Nadella did the same thing and said, "We missed the cloud." They've pivoted and they've caught up. It's a remarkable story, isn't it, Brendan?
Yeah, I mean, that was such a famous quote in 1995 by Bill Gates, and they declared themselves an internet-centric company, and have continued along. Funny you guys mentioned the Xbox, because I'd forgotten that I actually do have an Xbox here in the house that the kids use. So, and actually, they buy movies on it, and not only games, they buy games, movies. They use Netflix on the Xbox. So I'll take that back. I do have a Microsoft operating system here in the house.
Well, there's a lot to learn here. I think I wanted to ask both of you. We're all affirm, yes, Microsoft is hot. What are the things we can learn from Satya Nadella, the CEO of Microsoft? What can we learn from him as being just a showcase in great leadership? What has he done? Chad, what do you, when you look at him, what has he done beyond the move to the cloud, etc.? What is he doing as a leader? What's going on there that is creating all of this change?
I'm going to say that I don't know, Mike, and it sounds like we have another fantastic show topic.
Oh, yeah.
I would love to just hear from him, do the research. I'm not as familiar with the turnarounds that he's made at the company, other than just what I can see as a consumer. I actually had a chance to go to the Microsoft store here in New York City. It's definitely trying to be an Apple store, but I think it's finally able to stand on its own. The suite of products and kind of operating and user experience that they have. I think it's definitely rivaling Apple in many regards.
What do you think, Brendan, when you go and you look at the Microsoft experience is easily meeting the consumer offerings of Apple, certainly at least in a services perspective? I think hardware, they've got some work to go. Obviously in the B2B enterprise space and the hosting cloud space, they're doing a good job. What do you see? What do you observe as being the key things that are leading this transformation?
Yeah, look, I think Satya will be a great topic for a podcast to dig into it more. But look, Ballmer still believed that Microsoft could be all things to all people, and he was a very crazy kind of cat. If you want to watch some funny YouTube videos tonight when you get home, just type in Steve Ballmer crazy videos and you'll see some things you've never seen on stage before. But, when Satya came in, he said, he came in with the attitude, let's focus on what we're good at. Microsoft phone, bad. Let's get rid of that, right? They kind of, and there was some sort of missteps there with operating systems. They developed a desktop operating system for the phone, then they developed a mobile operating system for the desktop, and they kind of sort of got that a little bit wrong. But they've certainly focused on what they're good at. And then they've also now, what he's really done is focus the business around subscription products and recurring revenue. And obviously, B2B recurring revenue is about as good as you can get. So, they're in a really good place.
The interesting thing is they continue to play around with the Surface products. And, Chad, it just feels like each year they are closing the gap and becoming more like what we discovered the Apple platform is all about hardware, software, services. It feels like the gap is reducing dramatically, doesn't it?
more so on the hardware side of things. I still feel like the UI, there's just so much kind of legacy bad experience that it's trying to overcome. The creation of OS X, I think is, under Steve Jobs' guidance at Apple, is like really kind of an unsung triumph for them, just because their entire, the success of their entire Mac hardware system is really dependent upon that OS, which is over a decade old, I think, at this point.
Yeah, yeah. The interesting theme now, if we step back and we look at these 5 companies, what's really interesting is we had very strong alignment on Tesla and Microsoft, which were all strong yeses. We had Facebook and Twitter, which were all strong no's. And Wework fell awkwardly in this. I mean, this is where the margin of hot or not was its finest, if you will. Brenda, I wanted to ask you, when you see the theme that Facebook and Twitter were strong no's, Tesla, Microsoft, strong yes, are there any sort of observations or insights you have about what ties these together? It feels like certainly a theme that we talked about earlier was Tesla and Microsoft build stuff, make stuff that's not dependent on the social graph. Facebook, Twitter, pure app companies dependent on social. Seems like there's something there. What are your thoughts?
Yeah, I mean, Facebook and Twitter are both very much, B2C players. Obviously, their revenue still comes from advertisers. And I just think that maybe the market is looking at how fickle consumers are today. We had Snapchat seem to pop up out of nowhere and get millions of users. I think if I'm investing and I'm trying to build in either 2 factors for my share investment, like the share investment decision, which is I want high growth, but I also want longevity. If it doesn't, if the growth slows and I'm not convinced I've got longevity, it makes it a pretty risky investment. If I look at something like Microsoft and Tesla, you got some longevity there. You could question about how large the growth's going to be, but the longevity is going to be there. So that's probably where I think the nervousness is around Facebook and Twitter, is that there will be a new social network that will pop up. No one thought there was a spot for a Snapchat, and there was. No one thought there was a spot for an Instagram, and there was. So that there will be a new one that comes up as handsets and technology changes that allows us to interact with it in a new way, in a different way, and there's going to be more opportunity out there for someone to put their hand up and become, the social graph of the future.
Chad, what are you seeing? Are there any themes or learnings that you're pulling from the strong hots, the strong nots?
I think part of it is, I believe it's fundamentally easier for people to wrap their heads around companies that build things. It's harder for, in some ways, consumers. The United States Senate spent half its time asking Mark Zuckerberg, just like, okay, like how exactly does Facebook work? And how, it's just like no one really understands like what it is and how it makes, or how it makes money or any of that. And it's not to say that there's not some value in there and that they're doing some really innovative things at times. It's just hard to like put a pin in it and be like, yep, that's what Facebook is and does. This kind of insidious nature of the user as the product. I would probably guess that 90% or more of Facebook users, they just don't understand or grasp that concept. I think once people start waking up to that, both at Facebook and Twitter, those platforms may not be as appealing to them as other things.
I think the other interesting thing I'm seeing here, guys, is that Facebook and Twitter don't charge their customers. Like the end user doesn't pay. And this leads to needing to exploit those users, but it also leads to tons of fake users. Whereas if you look at Tesla, Microsoft, and Wework, there's a much clearer transaction happening. And I wonder if that's actually another theme here, like the danger of free products and services.
Yeah, I mean, Ben Horowitz famously said a few years ago that 9 out of 10 companies that are started are B2C, and 9 out of 10 IPOs are B2B. So you think read into that data. So yeah, there's no doubt that monetizing from other businesses is probably the better way to go, and monetizing on consumers is kind of limited. You get them to pay, like with a Netflix style product, but obviously you have to have a compelling product to make people pay for it. I'm certainly not going to pay for for Facebook just to watch two of my friends arguing about Donald Trump or something. So yeah, it's more difficult to monetize, but I think social media is still here to stay, and there'll be new players that pop up.
Well, certainly, what's been great about this is that not only did we do some decoding, where 2 for, 2 clear yeses, 2 clear nos, and 1 sort of right down the middle. But I think, Chad, we've found some very interesting topics for future shows. Obviously, we need to dig into the founders of Wework and WeChat, but I think Satya Nadella, he is screaming for a deeper investigation. Wouldn't you agree?
Yeah, we'll be adding those to the future episodes section of moonshots.io, I'm pretty sure.
And the funny thing is, the list of future shows, this thing never gets smaller. Despite the fact that we keep producing shows, we seem to get more and more. It's like this sort of cumulative compounding that just keeps happening. The list just gets bigger.
Yeah, and hopefully we'll bring Brendan back for the trifecta in a 3rd episode here soon.
Oh yeah, absolutely. Well, I think there's a lot to take from these companies, and I think there's probably for the first time we've really explored some of the downsides of innovation and being very careful of how you exploit your users, how you actually create a balance in marketplaces, and knowing which business you're in. Great deal of focus for Microsoft. There's some warning signs there for WeWork. They're on a cash-hungry sprint in perpetuity, perhaps, which is enormously challenging. But Brendan, any last thoughts as we sort of wrap up our hot or not? Have you taken any new ideas from this show, despite the fact that you and I were unable to convince Chad to swing across to the nose on WeWork? Any other insights or learnings that came to you through the show?
Oh, look, the interesting thing about WeWork, and one of the reasons we're divided is that it's sort of like a B2C company, because a lot of individuals that are freelancers and people like that go in there, but their real game is to try and get people like Microsoft and Google to take and IBM to take hundreds of desks in there. So they're sort of playing a little bit of both. So it'll be interesting to see how that pans out. But, look, it's great to be on the show, guys, and I will be checking my email daily for the next invite.
Well done. And thank you ever so much for joining us, Brendan. Chad, I wanted to ask you, did you, even though we couldn't get you on WeWork, were there any other thoughts or ideas that came to you from discussing who was hot and who was not?
No, other than I would love to do some more shows like this when we're kind of comparing and contrasting different companies in different industries with different business models, doing different kinds of innovation. This has been a lot of fun.
Absolutely. Well, listen, I think there will definitely be time for another hot or not before the end of the year. There's so much seems to be happening. I mean, it's incredible that literally I woke up this morning and Elon Musk is announcing that he wants to take Tesla private. It's like this never-ending dynamic where there's really massive moves in these innovation and technology companies, which makes the show such a joy to do. So, Chad, thank you for all of your ideas and for staying the ground on WeWork. You were strong. You didn't buckle under the pressure.
Yeah, we'll see. In a year, in 3 years, we'll see where we're at.
Yeah, you're in an Australian pincer movement. Brendan Yell from one side, Mike Parsons from the other, and you're like, So they're doing something right there. So thank you to you, Brendan. Enjoy the sunshine on the coastal wonders of Australia. I hope you have a day of productivity ahead of you.
Awesome. Thank you, guys.
All right. Hey, that's a wrap for the show. Our first hot or not, a nice change in the winds of Moonshots after a huge Apple series. Very exciting times ahead. Chad, who are we going to jump into? I think we're going to jump into a whole new series for the next show. Have you got are you feeling refreshed after the hot or not? And are you ready to jump into a whole new world over the next few weeks?
Yeah, I've got some fresh downloads in my Audible app on my phone to listen to in my lovely walking commute to and from my Wework. We're moving on to our author profile series, hearing it from the likes of Peter Drucker, Clay Christensen, and Eric Ries, and Simon Sinek, too.
Simon Sinek, yeah. Now, of those, who are you most looking forward to, Chad? Who's had a lot of influence on you?
I love Peter Drucker. As kind of dry as he can be, I think he's kind of the godfather of strategy and kind of management as we know it today.
Yes, I'm a huge Drucker fan. I wanted to ask you, Brendan, out of those pickings, so think Clay Christensen, who had Innovator's Dilemma, Peter Drucker, Simon Sinek, who's the famous Start With Why, and Eric Ries, the Lean Startup. Of those four, who would you be most interested, most curious to decode?
Oh, look, Simon Sinek, I think, is, for me, easily the most interesting. There's so many, that famous YouTube video of the art of why we buy things, I think is just at the core of kind of psychology. And I know that Simon's written other books and done other talks since then. So I'd be super keen to tune into that one.
Awesome. All right, guys. Well, listen, for all of those listening, if you want to have a look at the list of future shows, hit moonshots.io. We also publish all the shows, all the show notes. Everything is up there and more. So check that out at moonshots.io. Thank you to Brendan, to Chad, and to all our listeners. That's a wrap of the Moonshots podcast.